Good afternoon, traders and investors. Will back here with another one, guys. Today, bit of a sour day on the markets as well. All of our major indexes are in the red. Once again here, SPY down 0.76% and QQQ down over 1%. Now, we are going to go over, guys, some of the main reasons why we are facing this pretty large technical correction here at this point. SPY down over 5% from 52-week highs and QQQ down pretty much 7% from our 52-week highs. So decent little correction level. The moral of the story is now is the time to take a step back, to be patient, and to let stocks come to you. And when we get into this weekly consolidation mode and potentially monthly consolidation as well, I want you guys to realize that these usually don't turn around in 1 or 2 single days. So you will have time to average into the plays that you really like. So just be patient and let things come to you. So before we get into our covering of the major indexes, our major tech names, and I'll also cover a bit of the Walmart earnings that we had today, I wanted to go over some of the main reasons why we're in this technical correction right now. All right, so let's get into it right away here, guys. So I've written down 5 reasons here why, in my opinion, we are seeing the SPY pretty much decently sell off here and our major indexes as well. Obviously, you guys know this was all sparked with the credit downgrade here, which was pretty much Tuesday, the 1st of August after the close. And ever since then, we've been on a steady downtrend. So obviously, USA credit downgrade has played a big part in this. The last time it happened in 2011, it sparked pretty much an almost 12 to 15% sell-off in our major indexes. There were other things going on at that time, but that was the main catalyst that started a technical correction. Number 2, your CE real estate woes. CE is for commercial real estate woes. Now, why Moody's and the other agencies, right? So Fitch and S&P 500, why they've been criticizing some of our major banks recently and downgrading individual banks is because of their commercial real estate exposure, guys. Obviously, this is a space that since 2020 with the work from home movement, a lot of office space has come under jeopardy. A lot of it's been vacant. And if the owners of said real estate were to default on these loans, especially now that interest rates are a bit higher, they may not be able to refinance them adequately at higher rates. So they may have to default them. They may have to default on them altogether. So this is why we're seeing a bit of a pullback here and a bit of a bearish news media headline on it in the past 2 weeks, right? So completely normal event. In my opinion, it's been a rumor, not a rumor, but it's been pretty much floating around for the past 2 years. And just know that real estate is a lagging asset. So in my opinion, this is going to be good for inflation. Real estate will come down. Rents will come down here in the next 1 to 2 years. However, real estate is really, really slow to adjust to markets as opposed to other assets. So it'll be good for inflation, but bad for the banks holding the bag currently, right? None of our major banks are heavily exposed to this stuff, but some of our smaller and medium regional banks just may be. Number 3, we've had the inflation uptick, something we've covered, guys, on the channel for the past month. I've said that a negative catalyst leading into the months of August and September may be a slight uptick in inflation. Why? Well, because we're measuring July and August respectively, and those are usually the months where consumers are spending a lot of money because it's summertime, they're out, they're doing things, they're buying more things, consumer products, they're going out to more restaurants, they're taking more international and domestic vacations, right? So it's completely normal, guys, that we have a slight uptick in inflation as opposed to our now 9-month downtrend that we've been having. The uptick is ever so slight, though, as we've seen in CPI and PPI too. Nothing to be concerned about, but a natural uptick due to seasonality. Number 4, seasonality in the stock market. So I wanted to show this to you guys, right? So we have a nice little chart here that shows us the seasonality of the market on any specific year, right? So the blue line is the 37-year average. So the average seasonality over the past 37 years in the markets, and the red is the past 15 years. So if you can see, my mouse right now is over the month of July. As you can see in August, right before August hits, the market always usually peaks out and then kind of drops through August. August is never known to be a very good month for the markets. You can see in the past 37 years, it's dipped ever so slightly. In the past 15 has been slightly more volatile. Obviously, we've had 2 recessions in the last 15 years at this point. So you guys can see that during the months of August and September, the markets don't recover to our July highs until pretty much September is midway through, right? And then obviously another little dip into October, potentially due for our Q3 earnings, which companies traditionally don't, the Q3 earnings aren't as good as Q4 earnings. And then October through December is when you usually get your end of year rally, as Q4 is usually good for most companies. So as you guys can see here, we are well within our norms in terms of seasonality, which was to be expected, right? So that's point number 4. And point number 5, your technical correction. So technical correction only means, guys, that we had run so much on these indexes. Look, SPY was overbought and QQQ as well on the weekly, overbought so much here, guys, that we were due for a technical pullback on the weekly, but not only that, on the monthly as well, right? 6-7 months of upside in a row, you are eventually going to get your weekly and monthly pullbacks, right? So completely normal in my opinion. All 5 of these catalysts, guys, are really short-term catalysts here that are going to be a non-factor when we look back at this market in 6 months' time, right? So just keep that in mind, guys. All of this is normal, all of this is predictable, and none of this has true black swan, facets about it, right? So as opposed to last year when there was so much uncertainty in the market, right? China, R versus U, supply chain constraints, commodity prices going through the absolute roof, right? Inflation out of control, no ceiling potential on interest rates and whatnot. No idea how the Fed was going to handle it either, right? There was so much uncertainty in the markets last year. Now we are dealing with more certain and known things. And if there's one thing is true, market loves certainty. So don't expect to fall off a cliff is the moral of the story. This is just a much needed pullback. So let's get into one thing before we do our indexes, and that's just Walmart. I want to cover Walmart ever so briefly, guys. So you guys can see here that on the Walmart chart, we did pull back here 2.25%. But Walmart earnings today were actually very, very good. It's just that Walmart was at the all-time highs. So similar to other earnings this entire season, if they don't post outstanding numbers, it's going to be tough for them to really get a nice 5-6% pop off of normal numbers, even off of a normal beat. But Walmart, as you can see, guys, they beat here on the earnings by a nice 7, almost 8% here. And then they beat on revenue as well by almost 1%. So not that great of a beat, but Walmart did up its guidance for the year, which is very positive. It's just that it was not able to counteract the negative market sentiment in the whole markets today, so got dragged down as well. You can see here, guys, Walmart raises full year earnings forecast as grocery, online growth fuel higher sales. Very, 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 very good here. E-commerce sales jumping 24% year over year. So very good. Walmart had a little slump in e-commerce sales in 2022 last year, pretty much, especially after 2020 and 2021 when everybody was shopping online. But now they're back, right? So very, very good trend here in the e-commerce. You can see same store sales, right, have also been on the increase. They've increased fiscal year guidance for 2024 as well. So you guys can see that very, very good. They've maintained their post 2020 high volume, which is very, very good. They were also able to reduce inventory significantly. And here's your e-commerce sales. So you can obviously see the absolutely normal boom 2020 and 2021 for e-commerce sales, right? And now there was a bit of a lull last year as people returned to shopping in the actual store. And now you can see, guys, that they've done a great job of remonetizing their e-commerce sales, and it's actually on the uptrend again, right? So very, very good, very, very good for Walmart as a whole. That's winning over frugal customers. Obviously, you guys know in the midst of a potential recession, people will pivot to lower ticket items and will start shopping at places like Walmart and dollar stores more for many things, right? For everyday items, but also for grocery items too, since Walmart started doing that. And also we have cooling inflation, more optimism. So very, very good. Food prices remain steady, but general merchandise prices have dropped compared with last year, which is good, right? Sign that inflation coming down is actually a thing, especially when Walmart, one of the largest retailers in the world, is telling you that its cost of goods is coming down, and food as well, right? Some staple grocery items, however, have fallen. When one of the biggest retailers in the world is telling you that things are getting cheaper for them, it's very good. They will pass the prices on to you because that's what Walmart is known for. So decent report here from Walmart. Nothing really to pick apart, just couldn't get it done and was dragged down by the overall market, guys. So without further ado, let's get into our indexes. Now, weekly consolidation still underway, guys. So really nothing to say on these charts. The bulls still have not put in any sign of a daily bounce relief, except for on Monday, right? And then since then, it's pretty much been waterfall drop. So on the SPY, you're going to keep an eye out for your 431 level. That's your next area of support on the daily, crucial level. On the weekly now, we have now lost the 12 EMA, haven't lost it since pretty much our banking crisis here back in March. So remains to be seen if they can hold that. But this 431 level here is going to be very, very, very crucial, guys, for the bulls to defend in order to potentially get a daily bounce underway. But as we know, guys, we are now in a confirmed daily downtrend, right? So any bounce, just expect a lower high. Anything below 448 is just going to be for a lower high for potential bullish downtrend bearish downtrend continuation. Now, what you need to see if you want to see this move stop, right? There's still a lot of time left in the month of August, and then we have September as well. Eventually, the bulls are going to have to put in an engulfing move as compared to a previous downswing, creating enough space on this leg here to reverse the entire move to the upside. So until you start seeing signs of that, guys, we are still just expecting this downtrend to continue. Any single pop is just going to be for further continuation, guys, until we establish some sort of relative bottom on the weekly chart. Weekly chart pulling back decently now, guys, right? Decent pullback on the weekly. So we're going to take this one day at a time. One thing that's notable to me, we have now cracked the July monthly lows on SPY and QQQ, which also leads me to believe that when this weekly chart does potentially bottom out, we may just get a weekly higher low compared to our previous high, and then set a weekly downtrend, which would be for monthly consolidation, right? So monthly consolidation would be 1 to 2 months potentially of something like this. On the weekly, that could look something pretty much like this and continue into September. But then the bulls have definitely a shot to then reverse it into a new weekly uptrend, right? So just keep that in mind. QQQ, same thing, daily downtrend is confirmed at this point, guys. And I don't talk about this lightly. I know I'm being kind of like chippy about the whole situation, but trust me, guys, you just need to be patient and eye stocks that you want and really recognize the levels that you want them at. And don't be scared to purchase because the overall market on a longer term time frame is healthy. The economy is healthy. The jobs are healthy. Everything is relatively good, in my opinion. These short-term negative catalysts are just short term, right? So on the daily chart here, same thing. Any bounce is just going to be for a lower high, anything under 371 pretty much. In terms of support, guys, we're right here, right? 357.85 is going to be the next level. We'll see if they flush it tomorrow. If they do, we're all the way down here to 349 on QQQ, next level of support. And obviously on the weekly, tons of space here for the bulls to work with here. But eventually we're going to need the bulls to play some defense and at least allow us for some relief before potentially setting a weekly downtrend into further monthly consolidation. You can see monthly candle now completely engulfing July and now into our June candle. So wouldn't be surprised if August is a red month and September, at least the beginning or middle of September as well, which could bring us down to our monthly 12 EMA. But bulls, tons of space on the monthly, guys. So even if we set a potential weekly downtrend, there is so much space for the bulls to take 2 months off. I know it's a long time, guys, but during that time is the time that you really try to build your shopping list and build your new positions for the next 6 to 12 months. XLF financials pulling right back almost to our support area, guys. So they're giving back a lot of this move, right? A lot of this move has been given back at this point. Daily downtrend is now confirmed. Any single bounce is just going to be for a lower high. Anything pretty much below 35 is just going to be a lower high for potential downtrend continuation here. So when we're in a downtrend, we zoom out to the weekly chart. Anything still above 3250 is just going to be for your weekly high or low. Now coming into the danger zone, guys, running into the moving averages and running into my support level as well. So we have a bit of confluence here. I'm expecting the bulls to put up a bit of a fight here, but if the bears manage to flush this zone, guys, it's not going to look great. At that point, if they take back too much of the move, the best we can hope for is potentially a tightening range of accumulation before the bulls recapture this chart, potentially in the next few weeks' time. So just keep an eye out on that for XLF. XLV, also not looking the greatest, but what we're looking out for, guys, best case scenario, tightening range, right? Worst case scenario, if this keeps up, The bears might set the daily downtrend. At that point, we're just looking for more weekly consolidation here. The level that I don't want to see them lose is your 129 level, the level that they started this move from. Don't want to see them lose that, guys, because that would be crucial. We would just go back to being trapped in that range here. So as you can see, there's a nice little trend line here. I'm expecting your last area of defense. If ever we come all the way down here, guys, bulls absolutely need to hold the 130 level. Absolutely need to hold this. But for now, we're taking this one day at a time, guys. You want to see them hold this low here, 132. There's some decent level of support here, which was previous resistance, right? So expect the bulls to be putting up a fight on healthcare if we do come down there. I really want to see this play out as a tightening range here. But if we do get the daily downtrend, guys, just keep an eye. 130 is going to be crucial, because if we lose that, guys, then it's not going to be looking good. We're just going to go back into this monthly tightening range for potentially another few months after breaking out so nicely. IWM Russell, complete free fall on the Russell right now. We're coming all the way back, guys, to our support area down here, 180, right? So daily downtrend, very hard, right? Very hard daily downtrend at this point. Any bounce under 194 is just going to be to set a lower high compared to this high here, and for potential continuation of the downside, guys, right? So what the bulls need to do on all of these charts, guys, like I said, the most likely scenario is this. But if they can put in enough of a move, we might be able to reverse these, right? But just keep an eye on that over the next 3 weeks, guys, because it does take a lot of time for you to reverse some of these longer term weekly drops, right? So anything on the weekly here above 180.5, 180.6 is just looking for the weekly higher low. But at this point, guys, not looking good for the Russell. The bears have taken back too much of the move. The best case scenario becomes a tightening range. The worst case scenario becomes a weekly downtrend. At that point, you will be looking for further monthly consolidation. Bulls running out of space, guys. Anything above 169, 170 is going to be just for a monthly higher low, but bears pulling back hard into this area, right? So may end up just getting a tightening range as we iron out these negative catalysts here and growth stocks are not able to run. My complete value position, this is a support line, guys, but my best area that I want the Russell at, if it can go back to 175, 170, that is my sweet spot. I don't want it to go back there, but if it does come all the way back here, guys, and we undo pretty much the last 2 months of work here, well, I will be looking to write some options in this area here, because in my opinion, it's a very juicy sweet spot. The 175 all the way down to 165, the bottom end of this range. Dow Jones also pulling back, guys, flushing our support level. They flushed it right then and there, right? So what were we counting on, guys? We were counting on confluence, 12 EMA and the support. Bears cracking through it in one clean shot today, right? Very, very, very notable to me. They're not entirely through this zone right here because it's a zone, right? It's not just this one little line here, but pulling back into it hard at this point. Daily downtrend on the Dow Jones is set. So anything below 35,300 is just going to be for a daily downtrend continuation here. Weekly consolidation is definitely underway here. Still looking for a higher low above 33.7. But if we lose too much, guys, once again, have the possibility to go into a tightening range. If you pull back too much, a V-shape becomes very, very, very hard for the bulls to do. But we'll see what happens. Honestly, none of our major value names that reported this week had bad earnings. They all had pretty good earnings. So surprising to see that even the Dow Jones names are not spared. But when we look at the heat map, guys, you can see this is a broad market sell-off. Technical correction, definitely, right? Only a few energy and Google pretty much to stand out here to save the market. Few healthcare names as well. But all in all, guys, broad market sell-off here. One day relative, you can see this as well. No industry except for energy was spared. One day relative, everything red. 1 month relative, everything red except for energy, right? So broad market sell-off, that's when you get a decent technical correction. So keep an eye out for those things, guys, right? Looking for the higher low, and you're just going to take this one day at a time. Wait for the daily bounce. Daily bounce going to set the lower high. We'll see how much space it creates. The key is measuring the size of these bounces. Bitcoin, terrible day on Bitcoin, right? Minus 7%. I did not even check this chart since 5 o'clock. It's dropped additionally, right? So Bitcoin, we were looking, I literally said yesterday that if we crack 28, we're going all the way down to 24.5, right? Well, we hit 25,300 today, guys. disgusting day for crypto, if I do say so myself. At this point, the bulls have lost all chances at a weekly higher low. The best you could possibly aspire to at this point is pretty much a tightening range here. On the monthly as well, guys, bulls giving back too much space, in my opinion. 24.5, right? They're almost there, right? So monthly tried to set it, but this will be in consolidation mode for a while with today's price action. That is for sure. It's going to take a while for the bulls to recover a type of move like this. We're going to need some positive catalysts like this, guys. A few master candle days like this, masterful candles like this, guys, to really reverse a move like this. We'll obviously see what happens. It's recovered decently since the bottom here, but still, absolutely terrible day on crypto. Has really undone the past 2-3 months worth of work all the way since pretty much the middle of June when we reversed this, right? So Bitcoin now sideways, not volatile, low volume. I don't like it right now. And now let's do our tech names quickly, guys. Apple quickly coming into my sweet spot now. Daily downtrend continues, guys, on Apple, right? So at this point, guys, weekly consolidation still underway. Just keep an eye. 160, anything above 160, but now the bulls are losing ground quickly from 160. Let's check the fib levels here. They're now pulling back further than the 618, right? Further than the 618. So whenever that happens, what do I say? The bears have come back too much. Most likely going to get a tightening range for accumulation before potential breakout here. It's going to take the bulls a while to reverse this downswing on the weekly here. So we're going to take this one day at a time. Eventually, you need to see the bulls engulf on the daily, change the daily uptrend. And only at that point will we be able to measure the size of the weekly bounce to see if we get a tightening range or if we get a weekly downtrend into further monthly consolidation. Monthly bulls, tons of space to work with, but it's getting dicey at these levels. This is why this is my sweet spot. Expecting the bulls to put out a bit of support here because it is our previous all-time high resistance area, which should now be acting as support, right? But we'll see, guys. I still have not touched Apple yet, even though it's in my sweet spot. Why? Because a common theme that you'll notice, guys, it won't, obviously, in my opinion, guys, these are not going to get reversed in 1 to 2 or 3 days. So we will definitely have time. So I'm letting the stocks get me the best discount that I possibly can. AMD also flushing into my sweet spot, 104 down to 100, but daily downtrend is now set on AMD, right? So now we have also lost the weekly. It is now a weekly downtrend, which means monthly consolidation is confirmed. It was always confirmed, guys, but at this point, guys, it's confirmed for more downside here. Expect a slight resistant support zone down here, around $98, right? So I'm still waiting for AMD as well. AMD bulls not playing good defense at all at this zone here, lost it today, right? So eventually, we're going to have to put in an engulfing move and reverse this chart one way or another. But for now, AMD bulls not able to do it. So we're going to be very, very patient with this one, guys. Even if it does come down through my sweet spot, still not touching AMD yet. $100 or below now is going to be my new target on AMD. So we're going to see how that plays out. We're going to let the next couple of weeks play out. I will probably be writing some premium on these because I don't mind owning them, but I will not be aggressive with it in these market conditions. Amazon also losing this whole support zone right here, right? So daily downtrend confirmed on Amazon. Weekly consolidation is clearly underway, just looking for a higher low, anything above 126. Amazon and Google are some of our stronger tech names. And if they really start pulling back here and really give back their weekly upswing, well, it's going to get juicy in the markets, let me tell you that, guys, right? So Amazon pulling back hard again today, almost down 1% again, still within this relative support area here, so not completely lost the battle, but does not look good. Our next area we're targeting is the gap fill here at 130. That will line up with our 12 EMA down here on the weekly as well, but still bulls still in control of the weekly, right? Anything above 125.60 just for a weekly higher low. So we'll see how far down they get. If they pull back too far and fill it all the way to 130, you might end up with a tightening range here, guys. Going to get tough for the bulls to V-shape this if they come all the way down into this area. So take this one day at a time. But for now, daily downtrend confirmed. And any bounce from here is just going to be for a lower high below 141 for further continuation of the downside. Google as well, giving back all gains today. Google was actually up 2.25%, but gave it all back intraday. Google holding up better than most names here, but in a tightening range, right? So name of the game here, guys. What's going to break first? The 128 area or your 134 area. If you ask me my personal opinion, Google cannot continue to outperform when everything else is red, right? So if everything else continues to stay red and weekly consolidation on our indexes continue, eventually Google will be coming down here. So just take an eye on that. If we do break down, we're going for the gap fill. 124 area is going to be the gap fill for that. My sweet spot on Google down here in the 120. So if we pull back here, expect me to be taking a few positions on Google, but Google, very healthy, guys, very healthy. This is a weekly bull flag. And if we start dropping a little bit, it'll just be weekly consolidation here at this point. Anything above 116 is just going to be a weekly lower high. Keep an eye on your gap fill area and the 12 EMA, same spot, a bit like Amazon. Meta pulling back hard, crashing through our 12 EMA today. We'll see how the week ends tomorrow, but not looking good. We pulled back through the line in the sand area that I did not want to lose. So now at this point, guys, Meta has lost pretty much your most recent weekly up push. And now weekly consolidation well underway. This leads me to believe as well, we've engulfed July's move for the most part right now. Leads me to believe that monthly consolidation on Meta is definitely coming. My sweet spot down here, 230 all the way to 200. We'll see if it actually gets there, but that's the area that I personally like on Meta myself. Daily downtrend continues, right? So at this point, guys, this whole line is now going to become resistance. So any bounce is just going to be for a lower high. Anything below 309 is just going to be for continuation to the downside here on Meta. Shame to see Meta. Meta was one of our lead bulls, right? So if now Meta joins the bears here on the downswing here, it's not going to look pretty for QQQ as a whole. Meta with a lot of room just to give up gains, right? It's not the one that's given up the most gains so far, but a lot of room for Meta to start giving up those gains and adding red to the QQQ. But monthly bulls, don't get it twisted. Monthly bulls in full control, guys. Even if we come down to my sweet spot, moving averager down here, this would even look not that bad, right? We look completely natural considering the past moves of Meta, right? So just take an eye on that. Microsoft as well, daily downtrend just continuing here. The bears are just grinding lower and lower, quickly approaching my sweet spot, 307 all the way down to 285, right? You do have decent weekly support here as well, right? At my sweet spot area, 307. That is the next area that I'm targeting personally here for that. But Microsoft for the past 5 weeks has just been absolutely brutal, right? Can barely find any green days on Microsoft, riding our EMAs to the downside. Daily downtrend continues. Any move up is just going to be for a lower high below 325 for continuation of the downtrend. So all these charts together here, guys, eventually you're going to need the bulls to reverse the daily time frames. Only when they reverse the daily time frames can I say your weekly bounce is underway. And at this point, the bears have pulled back so much that we could get weekly higher lows and then further pullback for further monthly consolidation August and September, pulling back into my sweet spot here zone on the monthly. Look, tons of space, guys, right? So just be patient, wait for stocks to come to you. NVIDIA earnings next Wednesday, so crucial for the market. NVIDIA can either save or destroy this market. I'll tell you guys right away, right? So NVIDIA consolidating here. I don't think they move much before earnings here, but they've put in a lot of space, guys, but rest assured, NVIDIA is going to end two ways. Either we're going to crack the 470, we're going to make our move back up and crack these 476 new 52-week highs, which will play very, very well into our semiconductor industry, or we're going to lose 404. If we lose 404, it will be pretty much daily downtrend at that point will be confirmed. Your weekly downtrend will pretty much be confirmed as well, right? Weekly downtrend will be confirmed, and your monthly consolidation will be underway. NVIDIA still with not much monthly consolidation. A lot of room to work with here, 332. If ever we pull back there is going to be the level that I'll be watching. A lot of time for that though, guys. I mean, that's pretty far down from where we are now. That's just, I want to set you guys up for where we could potentially go if earnings doesn't play out the right way and we move further down. But as of now, bulls playing decent defense here, created a lot of space, looking for the higher low for potential daily upswing here. So the bulls control the daily, but earnings is going to completely reverse anything I say. It's either going to confirm this daily bull flag here and smash to the upside, or we're just going to grind here, daily bull flag, and then boom, then you're going to lose the daily, lose the weekly, right? So keep an eye on earnings. And lastly, Tesla, absolute flush on Tesla here today, right? complete flush, 3% again. So Tesla, even when you see green candles, it's still a lower low on every single day here. Very, very brutal on Tesla, guys, since their 52-week highs, right? Down 27% almost. So very decent discounts on Tesla now at this point, right? Coming into the lower end of my sweet spot area, 210 is going to provide some very good area. 210 all the way down to pretty much 200. This level here is going to provide some very decent support. So I do expect the bulls, if they do want to step in, that is pretty much where they're waiting to step in for. But at this point, Tesla, if we get a bounce from here, guys, any bounce is going to be for a lower high under 241 for potential daily downtrend continuation. Until I see the bulls reverse with an engulfing move to the upside, reverse the daily uptrend, you cannot say that your weekly down move is done. When the bulls reverse the daily and get the weekly bounce going, very possible. The bears have taken back so much now, guys. Very possible even a weekly bounce just becomes a lower high for a potential lower low, sending us into further consolidation here, potentially all the way through the next earnings, Tesla earnings cycle, right? Monthly consolidation on Tesla, in my opinion, already underway. Anything above 153 just for your monthly higher low, but bulls need to start stepping in soon. Bears are taking back a lot of the move here, and if they keep pushing, may end up in a tightening range here, right? So the bulls need to start putting in a stop soon, guys. You know, 210 to 200 really is their last level that they can make this push at, right? And start creating enough space to potentially reverse the weekly here for the tail end of the year. Palantir with a terrible day today, down 8.5%, guys, right? So on the daily time frame here, as I was saying, this was a daily bear flag with continuation on the follow through today. Bit of a shame here. I really apologize for all the Palantir bulls, but we are heading lower at this point, guys. Bears have taken back a lot of this move, almost all of it, right? All the way down to 1358. Still have a last little support there, guys, but if we continue to push lower, your monthly consolidation will be underway, further underway, because now we've already engulfed the July move here. So Palantir, my sweet spot, guys, 13 was 13 down to 12, but we'll see how the momentum plays out, right? Why? Because we have decent support down here. I know it's not a lot, but this whole zone right here has been a previous nice little zone. So I expect a reaction down there if we do continue to drop. But now at this point, guys, you know, daily downtrend is confirmed at this point, right? So any bounce that we do get is just going to be for a lower high. Anything on below 1585 is going to be for continuation of the downside here until the bulls put in an engulfing move and reverse it. PayPal down once again, guys. We are now back to, you know, time machine prices, right? We're now back to July of 2017, exactly roughly 6 years ago, right? So PayPal starting to get into a position where I'm going to consider averaging into more stock, right? If we get down to 55, that is the area that I pull the trigger on a few more contracts. But as of now, guys, daily downtrend is well confirmed. We might get a bounce right here, right? If we do get a bounce, just looking for a lower high under 63.45 for your daily downtrend continuation. All of that until PayPal bulls put in enough of a move, reverse the daily uptrend, then we will start looking at weekly bounces and the size of the weekly bounces. So that's pretty much it for today's video, guys. What I want to stress for you today, okay? One thing I clearly want to stress is the fact that you need to wait for the bulls to recapture the daily uptrends. Until we capture the daily uptrends again, we cannot start saying that our weekly lows are in, right? If they can't even capture the daily, then why would we be looking at the weekly, right? So when they capture the daily time frames and set the new daily uptrends, then we measure the size of the bounce on the weekly. The size of these bounces on the weekly will let you determine whether we put in enough space to create maybe a tightening range, or whether we just bounce up a tiny little bit and then set the weekly downtrends for monthly consolidation, right? Which could last, as I said, per seasonality through the end of September. So a lot of things left on the table, a lot of time left on the table. So build your shopping list, guys, and be patient. Let stocks come to you. So I hope you enjoyed today's video, guys. If you did, consider liking. If you're new, consider subscribing to the channel. Once again, my name is Will. I really appreciate doing these things for you guys. I appreciate your engagement. If you have any questions or concerns or any stocks that you want me to look at for potential candidates to add to your portfolios, just drop me a comment and I'd love to answer it for you guys. So I'll see you guys tomorrow after the close on Friday. Have a great day and happy trading. Peace.